talking about, just one more thing I wanted to add. That was good, Ron. Could I have that last slide that was on there, opting out? What happens is, to opt out of Social Security for a minister, it is an allowable action, but it is only allowable after the first 2 years of being a minister. What it is expected to happen within the next couple of years is every 10 years, Congress opens up a window period that allows pastors to go back into Social Security. It is estimated that within the next 6 years, Congress will again open up a 2-year window period where all of the pastors who have left Social Security have the chance to opt back into Social Security. So if you want to go back into Social Security, you probably want to follow the next couple of years' tax laws to see, because when they write big tax laws, opting back into Social Security for ministers is not a big item for them. It's on page 5,000 of any new law here. So if you switch over to the next one here. One more thing too is I provided to you a letter. It's from me to you about Social Security tax, and that's what we just talked about. So on the way home, if you get really, really bored, you can read my letter about how you got to reduce the church's Social Security tax. And that's the item that we just talked about here. All right. We're going to talk about financial statements. We're going to talk about financial statements from 2 perspectives for the next 2 seminars here. First perspective is providing the pastor and his counsel relevant financial information to know whether or not you're going out of business or you're in business. All right. If I were to ask this question right now, I'm going to give you 3 answers. I'm solvent, I'm insolvent, or I don't know. Is your church solvent? Do you know the answer to that? Some heads are shaking yes. Do you know the definition of what solvency is? What is solvency? It's a very easy definition. Solvency is the ability to pay liabilities as they come due. That's solvent. Just like at home. If you have enough money in your bank account, pay your bills, you're solvent. But what we're going to talk about for the next 10 minutes is what financial information tells us whether we're solvent or not. All right? What financial information do you need to operate your church? Ron gave you a couple ideas. You kind of need to know what's going on in your church. You need to know revenues. You need to know expenses, right? Here's the point I'm trying to make, and we're going to talk about this again. I audit many churches, and the one thing I found with many churches is most churches only issue an income statement. Most churches do not issue a balance sheet. It is only a balance sheet that can tell you whether you're solvent or not. Income statement can't tell you, and I'm going to show you how in a minute. Go to the next one. All right. What do we have to do for the Church of God? Church of God has a couple of requirements that we have to do according to their minutes. First of all, in the minutes it says that the pastor and the council have to approve all expenditures. That's a requirement. The second thing it says is that financial statements, but it doesn't say what statements, are to be prepared at least quarterly. All right, those are the 2 requirements by the Church of God. So I'm going to make a recommendation to you right now, and I'm going to reinforce it by telling you the benefit of this, is those financial statements should include 2 things, an income statement, which you probably make already, and a balance sheet. Okay, what's the income statement do? Showing you how much income you got, right? And what else does it show you? How much expenses you paid. All right, go to the next one. All right, do you know, I'm going to show you this, some churches don't have enough money to take a loss. That's how poor they are. And here's what I mean by that. Go to the next one. All right, let's say a church starts out, it's brand new. It gets revenue of $10,000. See that? It has expenses of $9,991. Should you be happy? Okay. Why shouldn't you be happy? And I only got $9. But here's a couple things. Now think about this. This is what this statement is telling you. Did you have $9,991 levied against the church? No. You only paid $9,991. You could have had $20,000 levied, but you only paid $9,000. What happened to the rest of it? If you only issue an income statement, it goes away. You don't know anything about it, right? All right, go to the next one. A balance sheet does this. It reports your accounts at a point in time. So think about this. An income statement does this. Lasts for a period of time, 3 months. It tells you what you got, what you expended, what you got, what you expended. The balance sheet then is your report card on how you did for those 3 months. So it is imperative that every church council meeting have a balance sheet to tell you how you did after the 3 months or year. All right? Solvency, and as we talk, solvency is this. At home, every Friday, the wife asks, how much do we have in the bank? The answer is not a whole lot. How much do we have for bills? We got kind of a lot. All right? The same thing with the church. How many bills do you have? How much we got in the bank? You can only determine that from a balance sheet. Go to the next one. So at home we say, honey, how much is in the bank? The different definition that we use as accountants so we can bill you more when we use different terminology is current assets. How much we owe is current liabilities. So how are we doing in this one? We're doing good. All right. But you only would know that if you got this statement. You would not know this if you only got an income statement. All right, so what this is saying is we got about $2 on hand for every dollar that we're going to have to spend. Is this church solvent? Yes, it's very solvent. How many of you want $2 in the bank for every dollar that you had to expend? Yeah. All right. Now these next 4 slides take you down a history of what I'm seeing most churches, because most churches don't get balance sheets. This is what happens to most churches. Go to the next one. We talked about the 2-to-1 ratio. Go to the next one. All right. Let's say we had some income. All right, we had $20,000 in income, $19,000 expenses. Is everybody happy? Oh, you made some money. But again, this financial statement, we didn't pay our tithes. Okay, but you don't know that from an income statement because it only reports expenses paid. Right? All right, even though, look, everybody's jumping up and down, we made $300, but we didn't pay a lot of our expenses. But you would never know it from just an income statement. Go to the next one. All right. Here we are. We didn't pay our tithes. We didn't pay IRS. So now look at our balance sheet. You know, our income statement looked great because we made $300, right? Now we have $2,000 in the bank. Honey, what do we got in the bank? We got $2,000. But we have $4,000 now in expenses because we didn't pay our tithes and we didn't pay IRS. If you only have an income statement, that information goes away. If you have the balance sheet, now what does it tell us? Are we solvent? No, all of a sudden we're not solvent. But the problem is most board members or pastors don't keep this type of accounting and don't know that they're insolvent right now. So what does a bank look at? A bank looks at exactly what we're talking about here. It's called the current ratio. Current assets, how much we have in the bank, dear? And current liabilities, how much we got to pay. This is exactly what a bank looks at when they're going to give you a loan. All right, we're going to take it one more month. What happens the next month? We don't do it again. We have a good income, right? All right, everybody's happy, but we didn't pay our tithes again. We didn't pay our IRS bill again. But still, everybody's happy, got $500. Go to the next one. Now look what happens. We have $1,000 in the bank and $8,000 in bills because we haven't been paying our bills, but the balance sheet makes us book them. So are we solvent? We're very insolvent. Is a bank going to give us a loan? No. We have a 1-to-8 ratio. What that means is we only have about 12 cents available to pay $1 worth of liabilities. We're insolvent. But you see how it tracked to that? If you didn't have the balance sheet, every month you'd think you're doing great. You would know, we didn't pay a few bills, I know that. But this is what the type of information that the pastor and his council have to know to make decisions about the church. We can't let a 1-to-8 ratio occur. Okay, go to the next one, please. All right, how often should you get a balance sheet? What does the Church of God Minute say? It says at least quarterly. All right. Most churches I have get a balance sheet and an income statement at least monthly. Go to the next one. All right. So here's what I'm suggesting for you. If you don't have a balance sheet, you need to start presenting one and have it approved at every council meeting. If your system, if it's a hand system, if anything else, you need to tell the pastor and the board how much assets we got and how much liabilities we have at a point in time. Even if you don't have a balance sheet, they need to know this as information. You want to monitor. You want to make sure that you don't have a 1-to-8 ratio because your church is going out of business.